Alrighty, what's going on, guys? Edward here, back with another video, and in this opportunity, I'm gonna introduce also a new indicator that I'm including inside the ICT Skynet package as well. It's a whole bundle, and it's gonna be part of the ICT indicators. I have already created three. This particular one is SMT, right? It pretty much detects divergences, right? Or SMT divergence. Let me explain right quick what is an SMT divergence. If this is the first time you're actually watching this and you don't understand, this is a technique, one of the concepts from ICT, right? And basically, we use correlated pairs. I'm currently on Nasdaq, right? So what is the correlated pair from Nasdaq? The correlated pair is S&P 500, right? If you're trading futures, NQ and ES, right? Nasdaq and S&P 500. Nasdaq is NQ and S&P 500 is ES. They call it ES. So these two pairs are correlated. What does that mean? It means that they move similarly, right? Almost, almost. I don't want to say all the time, but almost all the time, right? And when they fail to move similarly, there is a crack, right? So, for example, right here, right quick, I don't want to take much time in here because I'm sure you have seen maybe some other videos on YouTube about SMTs. So, I'm going to be using this example here. So, basically, this is assuming, hang on, this is NASDAQ on the right side, and right here, this is S&P 500. All right, that's S&P 500. So what is going on? Nasdaq has taken down the high. It pushed up, right? Created a higher high, and simultaneously at the same time, S&P has failed to take the high. So basically, right here we have divergence. SMT, or smart money technique, it's a divergence. And what does divergence means? What do we care about divergence? Well, that basically it's a sign that's telling us that there is a potential reversal coming. Not necessarily is going to happen, because you're going to see, once you finish watching this video, you're going to see that divergences happen a lot of the times, and not all of the times the price actually reverse. You know what I mean? We're gonna we're gonna be looking for certain things, right, to make this SMT divergence thing uh, work better on our favor, and we can probably even execute and take trades, right? Because we use these type of things as a confluence. Not just because I have the SMT, that means that, oh my God, I'm gonna go ahead and enter right away because price is gonna drop, right? No, it's not what I want you guys to do. That's not what I do. That's not what ICT does. So we are not going to do that, right? As you can see here, currently at the moment, the indicator has detected a couple of divergences, right? So as you can see, I have Nasdaq right here, and you have to choose the broker, right? In this case, the pair as well that you want to follow. So in this case, let's say you're trading futures. All right. So you have Nasdaq. You're going to have NQ right here on your main chart, and right in here you're going to click on it. Right. You're going to click on that, and then you're going to go futures, and then just look for ES. You know, look for ES. Boom, right there. You click on it, and it will be here. The indicator will already match this correlated pair, and it would look right for those SMTs. So notice what the things that I have at the moment. I have it set to custom. You can set the sensitivity, right, to whatever you like here. However, after testing, I'm not going to show you right now what you can do here. I have it on custom, right? By custom allows me to modify this look back, uh, so it will do a couple of things for me. What does this thing mean? So basically, notice here, I want to bring the indicator there. All right, I want you guys to see when the indicator is pushing up right here, creates that high, and all of a sudden it starts dropping. Look, we're not getting an SMT drone yet on the chart, right? We're not getting it. We have this old one right here. I'll explain this old one, but right now I'm trying to see when. You see, we have 3 candles already, and it's still I have 0 SMT printed. Let's see. Boom, 4. Okay, so technically we have 4 candles. It took 4 candles for the indicator to print the divergence. Why is this delay? Well, because that's the purpose. That's what it's made for. I'm telling the indicator right now to look to the right, right? And after it considers that it has created a pivot point high, right? And we have a swing now strong to the downside, and S&P, because again, S&P 500, remember I'm on Nasdaq, but S&P 500, the indicator will detect that S&P 500 already swept this high. You know, it already swept this high, but Nasdaq for some reason has not swept this high. So when is this SMT line going to be printed? I'm telling the indicator to print it after 3 candles. I can tell the indicator to print it after 4 candles. You see now it disappeared, right? Or I can tell it to be printed after 5 candles. You see now even this one disappeared right there. So what that does is just give us, like, you see now is printed. You see, but 5 candles after. Sometimes it's way too late. So I'm going to show you here how we can play with this, right? Because you don't want to catch it too late. We want to try to get it as soon as possible, but no, also not too early, because going in too early, you're going to catch a false SMT, right? Because it does happen as well. Again, not every SMT is the same. The divergences, they don't play out all the time, and they just because you have an SMT doesn't mean the price will reverse entirely and you can catch the entire reversal. So anyways, I'm using 3 right now. I'm using 3 for my experience. I'm using 3. But you see, when I go to 3, I'm going to start getting more divergences drawing on the chart, right? And you'll be like, oh, I don't want to see this many lines. Why this one was sprinted? Well, because if we have an SMT here, that means that S&P 500, this is Nasdaq, that means S&P 500 did not take this high and actually dropped, right? So after the indicator detects that, it will count 3 candles, right? It will count 3 candles, and after the third candle, is going to print the SMT. Now, do we take it? Can I actually? How can I take a trade in here? That's the point, right? How can I use this SMT to take a trade? Well, there are plenty ways, right? One of those is, of course, you need displacement. What is displacement? A big move, a big candle, a big momentum candle with a lot of just a big ass candle, right? A big candle, whether it's bearish or bullish. In this case, we have SMT at the top. That means that we're expecting a reversal to the downside. We're expecting sales, right? So we did form SMT here, but let me tell you. Okay, we form here this divergence. 3 candles later, boom, it prints, right? But do we have any displacement? Do you see actually big momentum candle right now that you can probably take an advantage? Or do you have a change in the state of delivery? No, right? So there's no reason why I'll be looking for a buy, right? There's no reason. I'll just have to wait. It's an SMT, as I mentioned. SMTs will appear, they will be appearing all the time on the charts. Doesn't mean that you're going to be taking every single one. Hope it makes sense and this gets printed in your head, right? You're not going to be taking every single SMT. So what are the ones that I don't want to take? Well, let's wait, right? So in this case, boom, we're starting to have this big move. Okay, all of a sudden it's dropping. What time is it? 9:30. Very important, right? Timing. When it comes to ICT timing, Nasdaq 9:30 is the stock exchange. New York Stock Exchange opens, right? New York Stock Exchange opens, and we have this big moment, right? What is the first thing you see? displacement to the downside. What's another thing you're seeing here? We created a first bearish fair value gap after that move, right? We keep waiting, and oh, we're building another fair value gap right here. You have two fair value gaps now to the downside. I still don't get anything. You see, still no, don't have any SMT. Now, right now, we're having an SMT, right? So this is the part I want you guys to pay attention. Since the SMT was printed right now, right, price did drop pretty quick to the downside. I am noticing that we have not taken down this low, and we are now creating probably relative equal lows. That's a nice liquidity, potential liquidity that was formed now that I do want to target. So, what can I use? I noticed that this fair value gap was already, it closed above it. So that's a disrespect. So I'm going to forget about that fair value gap. And I'm going to pay attention to this one. So I could place a sell limit right here, my stop loss above that swing high, and targeting this lows. I could do that, right? I can actually do that. Or I can just probably just simply wait for price to, let's see if it's actually going to do it, because I'm telling you, it's not going to do it all the time, right? Let's see if it taps the fair value gap, right? Boom, tap it. Rejection. As soon as you get that rejection, that's your signal. That's your signal. Respect, right? Respect. Or you can wait for a bearish engulfing in this case, some more confirmation. You can wait for that additional, but this could be already way too late. Maybe you can place now the stop loss above that high. Now that's probably protected, and you can go for maybe a 1 to 2 now. But you see, because of that big candle right there, now it's probably a little bit too late. Other than, let's say you enter at the rejection, right? As soon as rejected, you enter there. You can place the stop loss above that candle or above this protected swing, and go again for a 1 to 2. That's another thing, right? Uh, or or you place a sell limit. As I mentioned, you place a sell limit. Jesus, you place a sell limit right at the fair value gap, right? You let it tap, and now right here you can just aim for a 1 to 2, just much closer. You see? So now you have three scenarios that you could have used, right? Now you see you're trading with the momentum. You're going with the momentum. You have these three type of different entry scenarios. They're all going for a 1 to 2 risk to reward. What happened with this? In this particular case, let's see if it reverses, right? You see, now notice it did drop, right? Notice that on the way down, the indicator will still detect, right? Sadly, it is what it is. And I say sadly because the indicator is actually spotting based on the settings that we selected. We're getting this the SMT anyways. It will be printed, but that doesn't mean that you're going to execute, right? What is the only way that you could probably pay attention to this SMT? Displacement up. Did you get any freaking displacement up with a fair value gap? Right? No, right? You're not getting anything. Even right here, after this sweep, are we actually, getting some big momentum to the upside? No. It did form divergence, right? After three candles right here, right? But there's no big displacement. Let's see if I change the number again. See if I change the number to probably 4. Yeah, we have another SMT here. Just because Nasdaq was dropping a lot quicker and S&P 500 was not. It looks like it was a lot slower. So anyways, yeah, it did print those. But you see that we entered at 9:30. The entry was right at 9:30. So that's kind of like this way you can actually execute. Now I'm going to show you a couple more examples that you can use in your favor to take this type of entries. Let's see. All right. So let's look at this scenario right here. Nasdaq, 1 minute, New York session, opening right here, right? So if we look at it, if we look at the structure, let's look at this recent structure right here, right? Probably it's not necessarily what I'm going to do, but anyways, we had a break. Price creates a high. I always like, whenever I'm trading New York, I always like to mark up the recent high and probably recent low, right? And maybe this low, which Nice double bottom here. Okay, that's that's me understanding the structure, and then I know that for example that double bottom right there, that's a nice liquidity, right? It's a target. So I'm already having an idea, right? I'm just having a a vision right now. So I know these lows right here are potentially going to get swept at in any moment. I'm on the 1 minute. You know, these lows can get swept in any moment, right? So for example, if price does this and show me a change in the state of delivery to the downside, I can go short, right? And I can target this lows. Or if it does the opposite, let's say if price does this, sweeps and then changes the state, I can actually go long and go for highs and continue with the trend that it looks like we are actually bullish, right? Looking bullish, at least right here. I'm not even watching on higher time frame. But anyways, that's kind of like an idea, right? A prediction. So, but anyways, let's say you did not mark anything of that. So we're just waiting here for price to do its thing. All right. Don't get anything. All right. Price is approaching the high. All right. So we have taken this high, right? We've taken the high right there. Let's close up a little bit here. We have taken the high. Let's see what's going to happen from here. Right now, the indicator has detected a divergence, right? We do have an SMT now, right? This SMT, why is taking, why is being printed right now? Because I told the indicator, I'm on custom. I told the indicator to spot the SMTs after 3 candles after creating the pivot point. That high point, that right here, that that is confirming that S&P 500 right here, S&P 500 has not taken this high, right? Has not taken the high yet. And Nasdaq is actually sweeping the high. So after creating that pivot point to start reversing 1, 2, 3 candles to the downside, it's going to print the S&P. If I put 4, it's going to disappear. There we go, right? Because it needs another candle to confirm the S&P. You know what I mean? So for me, for my trading style, I think 3, it's about right for me. If you want to look for more confirmation or wait a little bit more, if you don't mind waiting a little bit more, well, you can increase the number. For me, I find 3 is fine. I still, again, just use it as a confluence. So at this point, I like what I'm seeing, right? We swept liquidity. What time is it, by the way? All right, it's 8:29. So news probably coming. I don't know if there news coming in this day. I don't know. Uh, but also you can see already there's a potential change in the state of delivery right here. So if we get a candle closing below, I can actually go for sales as well. You see what I mean? So I'm trying to combine now the SMT divergence with the structure from ICT. What is the structure? But basically, when price takes a high and we have a change in state, that's a potential reversal, right? And so we see that we spotted a liquidity sweep, and the indicator is also detecting divergence, you know? So now it's an extra confluence. Now you do need, in order to execute, if you have your change in the state of delivery, that's a beautiful confirmation. So you can enter either immediately, right? Or you wait for the retest and you enter on the retest. Something like that, right? And because I already know that I have a potential double bottom, that's a beautiful target that I have already. It's so obvious right there. That double bottom is a beautiful, obvious target, right? So you see, now let's see if we close. Candle does close below, right? So again, as I'm telling you, you can enter right away. From there, you can execute right away. Place the stop loss above the swing high. You can target 1 to 2, right? Or probably this lows, right? About 1 to 2, right there. What happened? Right? Perfect. We drop. If we would have placed a buy limit order right here, the market never came back up, right? To read this. So it would have leave you behind. So the change in the state of delivery, it's already your confirmation. You don't need to wait for a pullback, all right? you're probably going to have a not so good risk to reward, but who cares? At least you can get a 122, a 122R. It's a beautiful, right? Notice that the indicator also detected two SMTs at the bottom, but did they actually displace up, or did we have a change in the state? No, right? There's nothing here going on, so I don't care about these SMTs, right? So now let's try to combine this thing as a final explanation here. What would have happened? This is the divergence, right? This is the moment that the price actually sweeps liquidity. So I'm going to now show you, I'm going to bring my Skynet Pro ICT indicator, bring it on the chart right there. There we go. So you see the indicator is detecting manipulation. What the indicator does, if you have not seen my indicator, I'm going to leave a playlist right here at the top based on ICT. So basically this indicator detects this type of setups, right? So wait for it. Price sweeps, you see, is marking up a line. You don't need to draw any lines because the indicator is doing everything for you, right? Right there, detected the manipulation. So I'm going to wait for price to do its thing. The divergence has not been printed yet. Remember, it takes 3 candles. Boom, right there. We have 3 candles now. So SMT, and I'm going to let my indicator tell me when to get in now. So I'll wait for it. Boom, indicator, it's printing the signal right here. And now, again, you have 2 indicators working hand to hand. Now you have a lot of extra confidence. You have your divergence at the top. You have a change in the state of delivery. The indicator is detecting and marking this thing for you, right? So by doing that, you see, it's giving you the stop loss, is giving you the entry point, is giving you TP1, TP2, and TP3. You can actually expand this to, oh, sorry, this is not what it is. Extension, this one. Want to extend the line a little bit. So anyways, you already saw what happened. Price hits TP1, TP2, TP3. So as you can also see, the indicator also prints the standard deviation projection. I don't know if you can see it here. Let me hide the time zone. There we go. You can see it draws the standard deviation projection, right? It uses the Fibonacci as well. What is that standard deviation projection? Is basically this. What this does is the indicator detects the sweep, detects the change in the state of delivery, and already gives you a projection target. So what is that? Basically the Fibonacci, right? ICT uses Fibonacci from the high to the low of this last manipulation move and goes standard deviation projection. And basically it's telling you where to target, where the target normally, where the price can reverse. Sometimes when it hits that 2, between 2, 2.5, sometimes the price actually reverses from there. So if that fully aligns with maybe, close to a target, you can just simply target that like that. So anyways, this is what I wanted to show you guys. The combination now with, bring it back up. Hang on. The combination between the ICT Skynet Pro indicator and the SMT divergence now. Again, you can see that they do work hand to hand. So if you have any questions, if you're interested, just let me know in the comment section. Follow us on Discord. I also have a Telegram group. Just make sure to check the links in the description. If you're interested, just hit me up, guys. I would love you guys to hear your comments about this, complaints, anything. I don't mind. I don't mind. I want to hear what you think about this. If it's a cool thing, if it sucks, if it just, let me know. I want to hear from you guys. Thank you for watching, and I will see you in the next one. Take it easy.